Hello and welcome to Moneycontrol. You've tuned into IPO Watch and I'm your host, Nickey Mirchandani. Well, today we are here to talk about an Indian pharmaceutical company which is at the primary market, Innova Captab, which is raising in approximately 570 crore. Out of this, nearly 320 crore would be for fresh issue and the other remaining part of it would be OFS, sale of almost 56 lakh shares. But what's the company's cutting edge along with the financials and the strategy of the company? Let's finding out from the managing director, Mr. Vinay Kumar Lohariwala, who's joined us. Afternoon there.
Yeah, good afternoon.
Let's start off talk about your business. More than that, tell us about your USP versus other fully integrated pharmaceutical companies.
So, we are operating in three vertical. One is our CDMO, so that is our core business. We are working with closely with the domestic top pharma clients. Then second is our on marketing, so that is our front end domestic marketing. And third one is our export business. So that is the third vertical. And recently we acquired one company like Seron Biomedicine. So there we have the formulation as well as the API is also integrated with us.
Sure, I want to understand how different is your company as compared to other fully integrated player. What is your USP, or let's just say the cutting edge?
Yeah, so we operate at our facility is well designed, very efficient, and we are making very high ROE like 23, 25%, 30% even if you see the track record historically.
Okay, so ROE and efficiencies essentially is the driving factor and differentiating factor rather for the company according to you. But in terms of your business profile too, any differential offering that could set you apart from the other counterparts to that matter?
Yeah, so we have our DSIR approved R&D center where we can develop our own formulation. And then we can take the exhibit basis and can offer the product as an integrated company.
Okay. Okay, so Mr. Vinay, just tell us about your revenue CAGR, जो 27% के बीच में बढ़ा है between FY19 से लेके FY23 तक. आपको लगता है आप वो ग्रोथ रेप्लिकेट कर पाएंगे और परहैप्स आउट परफॉर्म कर पाएंगे उस नंबर को?
Yeah, so historically if you see as you said that we have grown 19 to 23 at a CAGR of 25% approx. So as on date we are putting a new facility in Jammu, so that is a 350 crore expansion, and then we have acquired the Seron Biomedicine also. Historically, we have done more than five times our asset turn. So, we can.
Yeah, but your revenue CAGR is 27%, right?
Yeah.
You think you'd be able to do a 27%, or you think you'll be able to outgrow that number?
So I think, ma'am, we are restricted with the forward guidance, but. You can see we are putting our capex in place. Most of the capex is already committed, so you can calculate from there.
Okay, capex has already been committed. The limited point that I'm trying to understand is 27% was clocked between FY 2019 to FY23. That's the limited period that we're talking about. In the next 5 years, you think that growth is achievable?
So even if you go back in 2013, our revenue was 50 crore, we become the 500 crore company in 2019. So historically, we have proven that 25% CAGR since our inception.
Okay, so that number is easily doable. Anything over and about that, since you're commissioning, you've had an inorganic expansion, you have more capacity now coming at Jammu. So with all of that in perspective, are you expecting any amount of incremental top line compounded annual growth in the next 3 years or 5 years for that matter?
Yeah. So if you see in Jammu, we are putting 4 blocks. So one is our repetitive block and we are adding 3 new blocks. So that will add the new capability products to our portfolio. So in 2017, we have expanded our facility with the oral liquid section. And with the help of that, we achieved the 500 crore sale in the 2019. So historically, if you see, like whenever we do a capex, that add a value and into the top line as well as to the bottom line.
Okay, that still is not giving me some clarity. Okay, let's also talk about your CDMO market.
So, madam, I think post listing, I can give a more clarity, but till then we are restricted with some statutory compliances that we cannot give you the forward clearance, clear guidance.
No, we're not asking you to put an exact number. We're just asking you to perhaps give us a sense of direction.
Yeah.
So whether what you've done historically, you'd be able to outdo that number. And just to be more specific about this, Indian CDMO market is expected to grow in the range of 14 to 16% from FY21 to 2026 as per your presentation. Do you think your company would be able to outperform that number?
Yeah. So historically, if you see that we have always outperformed our industry trend. So if the industry is growing like 10 to 12%, we have grown at a rate of 24-25%. So if you see there that Indian market also consolidating at a very fast speed. And because of this consolidation and all other things, we are getting the benefit.
Okay, so 14 to 16% you can go about with that number. That's pretty much given in that case.
In the industry report, yeah.
Okay. Just help us understand more about your acquisition which has come through, which is Sharon Bio that you were talking about. How much, when will it start reflecting on the financials? What kind of incremental revenue are you looking at from that inorganic expansion? Or let's just say the acquisition?
Yeah. So this company was in IBC and we have acquired it recently. So our acquisition was completed on 30th June 2023. So at the last date of the Q1. So our balance sheet is already consolidated. You can refer our RHP. And the P&L number will start flowing into from the Q2. So like we have also given the pro forma financials. So that is the hypothetical number that if it was consolidated 1 year before.
Okay, so could you reiterate your number for us in terms of top line performance?
Yeah.
What is the number that we can expect from Sharon Bio?
So Sharon Bio is like 192 crore sales and 30 crore EBITDA. So that if you refer our pro forma financials, so like we are the 1100 crore company with including the Sharon numbers for FY23 with 100 crore PAT.
And gentlemen, you said how much % of your incremental revenue will come from this?
So Sharon is operating at the 50% capacity. We are also operating at a 45-50% capacity. Like recently, we have the expansion of our general facility in FY21. So if you see our capacity utilization statement, in our cephalosporin block, we are at a higher utilization. So that we are again expanding into the Jammu region. So that will relax our capacity utilization of the cephalosporin. And other than that, we already have the capacity in Baddi for general block. And 3 new blocks we are putting in Jammu. So that will be like a 30-40 new product will be introduced in Jammu. The new revenue will come from there. Okay.
Coming back to where I was, you said your capacity utilization is 50% for Sharon, right?
Yeah.
And you said the % of your top line in this financial year, how much of that will come incrementally from this one? Is it 2%, 5%?
So 192 crore is the Sharon last year number, and we have recently acquired it, and we are in the integration phase. So I think that capacity utilization, 70-80% utilization is like the peak can be achieved. Like because of the seasonal variability also. In some months you will be like 90, some months like 70. So we have recently, that is our trend. If you see like a cephalosporin block or the other old block, where we have reached at a utilization of 75-80% easily. So we have recently acquired the Sharon Biomedicine. We keep exhibiting ourselves in the CPHI. We are in discussion with our existing customer as well as the Sharon's customers. So at customer level also we are doing consolidation. We are trying to increase our product basket as well.
Yeah, that's exactly what I'm trying to understand. Because 200 crore, you said, is the revenue that you're looking at from that number. That will form how much percent of your revenue in this
Yeah,
financial year?
1100 crore, if you see, like 200 crore is 20% or 18%.
Okay.
Yeah. So 18%
Okay, so
the increment
20%
revenue
is going to be
from
the run rate here on from Sharon Bio for the next few years, till the time you again ramp up the capacity for Sharon Bio, which right now, according to this financial year, will sit at 50%.
correct. Yeah.
And incrementally, as and when you unlock the capacity utilization of that inorganic expansion, you still expect the number to remain at 20%, or you expect the share to grow to 20 to 25% incrementally of your revenue?
So, like recently, if you see, we have the capacity there in the serum, in the API as well as the formulation. So, the first part is let do the that utilization in a better way, and then we can think about the inorganic organic expansions, like putting a more capacity there.
So, when do you expect to scale up that fully? By which year? At what level? And what is the maximum top line growth that Sharon Bio can give you at the fullest capacity utilization, optimum utilization?
Okay, so as I earlier said that the in Pharma, our trend was like 70-80% capacity utilization can be easily achievable. That we have done in our cephalosporin block or the old block as well. The same way, if we are talking with the customer to increase the product, like the company was in IBC, because of that, the customer is hesitant to increase the product portfolio. Right now, the Innova name is there. We have integrated this with our company, so and we are discussing with the customer continuously to increase the product basket and to onboard the new customer as well.
Okay, all right. So at 80% of your utilization, what will be the optimum level of revenue that this can look at?
So at 50%, we are at 192 crores, so that you can. I think
okay. Back calculate on that one. Okay, no worries with that. Let's talk about your new plant at Jammu. It's expected to be commissioned in by FY25.
Yeah.
What kind of incremental financials are we looking in with that commercial? Once the commencement happens, A, when will it reflect on your financials? B, and C, how much incremental revenue are you looking at from this one?
So Jammu is like our flagship project. There we are invested 350 crore, and the central government have given the incentive like GST reimbursement and interest subvention. So the GST reimbursement is like 3 times of your plant and machinery investment, and interest subvention is like a 6% as per the notification, right? So we have the like 235 crore of our term loan there in Jammu. And if you see our historical asset turn, so we easily done like 5 to 6 times of our capex previously. And the beauty of our Jammu project is like we are putting the new block in the new category of the product pipeline, like beta-lactam and penicillins, penums, large volume parental, small volume parental, general dye powder injection. So all these products currently we are not manufacturing. So the other side we like have the DSIR approved R&D center as well. So we have identified already all the products and started the development work. So in the next financial year, like once we commercialize it, we will put these products for the commercial production.
Okay. Also, I'd want to understand from you, the company operates at an average operating margin of 12 to 14%, which is in line with the closest peer, that is Windless Biotech, but it still remains lower as compared to the entire universe, the peer universe like Cipla, Lupin, Syngene for that matter. So could you help us understand why there is a difference in your margin performance? What essentially is missing as a part of the company's profile? Is it the pricing power? Is it the lack of innovative products? What exactly is not working in the favor of the margin profile to be that extra generator?
Yeah. So if you see, like we operate in a B2B segment, right? CDMO is our main revenue come from the CDMO, and that is at a B2B segment, and that is also most of the revenue come from the domestic market. So we are in like a competitive landscape. So we are consistently met 13 to 14% margin. But if you see our ROE and ROCE, so that is like 25%, 30% in some years, right? Our material margin is like 24, 25%, and we are very efficient in that to achieve a 30 to 40% of the EBITDA and a better ROC. Whereas in the Ceylon biomedicine, if you see, like they are doing currently 15% EBITDA only, but their gross conversion is at a 50%. So the company was in the IBC, now it has been consolidated with us, right? So the 50% GC is already there, like a corporate level, at the export exhibitions level, everywhere we are doing the consolidation.
Okay. With that in mind, you said FY25, if you're looking at, the commencement to happen by then for Jammu plant, could you repeat how much % of your revenues will incrementally come from that Jammu plant?
So, again, I think I need to restrain from this statement. We can discuss all these in detail post listing, and I will happy to give answer to all these questions.
Okay, a roughly ballpark figure if you can work with.
I'm sorry that again.
Okay, so let's talk about your repayment of debt. There,
Yeah.
you think after partial repayment of debt from the IPO, the company would have headroom for more backward integration and explore further inorganic, opportunities after Sharon Bio?
Yeah. So if you see, like once we have successfully implemented our Ceylon biomedicine plan, there is a deal inflow to us that if there's something is coming in market, it comes to us also. So we are not in a hurry to do any deal so far, because we have the two job in hand, like our Ceylon biomedicine is there and the Jammu is there. So post IPO, debt will come to the existing working capital loan, and the other loan will be paid, and even general corporate purpose, we have a good chest of approximately, say, like 80 crore. So post IPO again, the cash will be available. So some good deals comes, then we will definitely evaluate and we'll take the action.
All right, gentlemen, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. And all the best for your, initial public offer.
Thank you, ma'am.
Wishing you luck there. Yeah. All right, with this, it's a wrap. Thank you so much for tuning in.